take 20 minutes. And after this, I will take minus 1 minute.
Before beginning my presentation, I would like to thank all organizers of the conference for the opportunity to get together and to change ideas. So my paper, which title is The Logic of Financial Crisis in the Financial Region of Accumulation, the Brazil specific case, deals with the financial and economic instability in Brazil. To discuss this theme, my presentation will be structured in 3 parts. In the third part, I will introduce my cover article by reviewing what the conventional theory says about the financial crisis. In the second time, I will expose my main hypothesis and my methodological approach. And in the first time, if I add the time, I will discuss the specificity of the financial instability and the economic cycle in Brazil by analyzing the role of monetary policy through the question of sovereignty, monetary, and stockholder valuation of capital. So, this paper starts with an empirical observation. In spite of the implication of the policies of structural adjustments during the 90s and the liberalization policies during 18 and the liberalization policy during 19, a certain number of emerging countries, and especially countries in Latin America, experienced for many decades 3 tendencies: the slowdown of economic growth, the increasingly precarity in the labor market, and a continual rise of social inequality. In Brazil, for example, the informal sector don't stop rising. Considering the IHEAL data, which is the Institute Research of Applied Economy in Brazil, from May 1918 to December 2002, the number of workers with a working contract in São Paulo increased of 9.5%, whereas the number of workers without a working contract in the same period rise almost 18%. In the same way, the economic growth is a low level. For example, in the 1917 to 1973, the economic growth in Brazil was above digital. And in 1918 and 2002, he saw those 0.5%. Moreover, the growth economy is characterized by a deep instability, as shows the recent experiences of financial crisis in the emerging countries. In accordance with the supporter of neoliberal ideology, the process of financial liberalization, by promoting the free movement of asset flows, should bring an improvement of the global intermediation between the saver and the investor. This canalization of external savings should sustain the economic growth by financing the investment projects the most profitable. Finally, the recurrence of the economic growth should reduce the social inequalities and the poverty as well. However, as shows the recent experiences of developing countries, this scenario hasn't appeared. So the fundamental question is how to explain this slowdown and fragility of economic growth in many emerging countries. So, with the Eisen financial crisis, we can say that the model of financial crisis we were based on Krugman analysis, have improved to incorporate different processes like the problem of liquidity of bank, the hedging comportment, the problem of institutional imperfections. But we think that I don't find what I want to say. I will try to explain myself. So the constellation of conventional theory in the political backroom is to consider that to resolve the problem of financial crisis, we have to improve governance policies and to fight the market imperfections. I think that we think that the recommendation of general rules of governance applied in all emerging countries, whatever their historical specificity and structures, don't allow to understand the specificity of financial crisis in emerging countries. We think that the analysis of financial crisis and economic instability in a country like Brazil, for example, have to consider the nature of external constraints, which is fundamentally a financial external constraint. In this sense, we adopt an heterodox approach which analyzes the processes of financial and economic instability by considering the nature of growth regime of accumulation and the type of political economy which is enforced in a specific regime of growth. This text analyzes more specifically by going from the central hypothesis of monetary regulation of interest, the links between the monetary policy, the process of stockholder accumulation of capital, and the economic cycle in Brazil. The hypothesis of monetary regulation of interest, by rejecting the principle of neutrality of money of the orthodox theories, searches to unveil how the money, defined as the social relationship or social totality, notions already present by the Marx and Keynes, would constitute the fundamental way of the social regulation. In the framework of Brazilian economy, this hypothesis is justified if we reconstitute the historical analysis of indebtedness process of state and the implicit social and institutional mechanisms that have involved this public indebtedness in the context of the growth regime called in both situations. So I will present my fundamental hypothesis and comment quickly this diagram. So our fundamental hypothesis is that the role of monetary policies in Brazil depends essentially on the government debt as support of financial liquidity. I'm inspired by the concept of financial liquidity developed by Michel Aguilita and Orléans, regulationist researchers. The liquidity of a material good of an asset expresses the capacity to become an accepted mean of payment in determined society. I will stop here and comment the diagram.
So, in the case of this diagram, try to show stabilization plan of monetary stabilization plan. So the monetary policy is made by is articulate about the theory of credibility, and more specifically the Taylor rules. So exists a compromise between the neoliberal government and the monetary institutions to make a monetary policy which will satisfy the financial capital, the hegemonic position of financial capital. And this political economy involves high real interest rates. In Brazil, for example, in 19, the interest rate was 12% by year. It's very, very high. And in 19, it's about 15% by year. The consequences, the macroeconomic consequences, is very, very great because first, it involves reinforcing the profitable behavior of big bank, because for the bank, it's most profitable to invest in assets with a great financial liquidity than to distribute credit to the enterprises. So the banking have a patrimonialist behavior, and the comportment of the bank will involve a financialization of economy, because when the bank's price is very high, the enterprise too tends to place their liquidity in the assets which is most lucrative. So the first consequences is the vulnerability, because when the interest rate is very high, this is have the consequences about the intern and external equilibrium via, for example, the operational deficit public of governments, and via, for example, the current payments, balance of payments. So the cycle economic occur because by the interaction and between the monetary policies, evolution of macroeconomic indicators, and the anticipation of market financial.